Gap fill in reverse crude oil, also known as gap fill fade. Nice trade. Market went up overnight, pulled back to the previous day's close, just below the previous day's close last Friday. And we're talking actually yesterday. So this is still showing data from yesterday. Yesterday was a holiday and the market closed early. So it still keeps track of that, the time that it closed. And so the holidays can throw things off. But the market closed at 1300 yesterday instead of 1430. We have the custom session. And so it still keeps track of this closing price. And it filled that gap, penetrated that closing price. And now it's making a slow trend higher. And we are about 45 minutes away from the close. And this thing could do anything, you know, crude oil. It could turn out to rally and create this picture perfect trade if it rallies back to the highs and closes near those highs or higher. That would be a picture perfect trade. Or it could roll over and we could get stopped out, or come down here and we could get out. We get out at the open of the 1430 bar Eastern time. So it could do anything between now and then. That's the trade, one of the best trades we have so far today. Not many trades are going today. So this is I'll show you this chart in a minute, but these other 5 windows, no trades, tick pulse, no trades, very narrow range. In the E-mini S&P of less than 10 points, and we have a Cobra crude short there for minus $75. Not a lot going on. The grains are moving higher again. Soybean meal captured that move. You had the 50K or 100K or $1 million portfolio. You're in on that trade, and we missed a lot of it because the gap was overnight. And that's the caveat of day trading, where if you stay long, then you capture this whole move. But it's a strong market. The grains have been strong since the crop report the other day, and no other trades today in the portfolios. But I want to show you back to crude oil reversal, gap fill and reverse, gap fill fade, many different names for that strategy. And we can take a look at this pit session like TradeStation data, because we're going back to 1987 on this strategy, and I have the results here, and you see the results on 1 minute bars back to 1987 at cl.p. You have to have the full data package to get that, and you see here since 2004 this market has done well and rallied. The equity curve has rallied, I guess you could say. Not a lot of trades before that. It's kind of break even, and the ranges were narrower. But since 2004, if you want to further back test, the electronic market started trading on 9/5/2006, so about 10 years ago. And before that, it was mainly crude. And so if you want to test back a little further, we can test back to 1987, and you see there were some nice equity curve gains, but not really much to this strategy. It didn't do terrible, so that's the good news in those different types of markets back then. But since mid-2004, gives you another couple of years of extension on a nice equity curve. So really nice results since mid-2004 on this strategy. If you go back and look at the pit session, I didn't change the inputs at all. It's the original strategy inputs from the book, and I want to tell you about the book. You can get the ebook here, algorithmictradingsystems.com, or you can get it from our website. You can go under books, book strategies, algorithmic trading systems. You can get it there. You can get the members area here as well, or on my website, and you'll have access to download all the code. If you want to if you bought the book on Amazon and you just want the members area, you can go here. If you just want to buy the ebook, you can go here. If you want to buy them both, just click that and then come back and click that, and you can have access to both the ebook and the members area. And I'm doing a webinar on this strategy with TradeStation in a week from tomorrow at 4:30 p.m. Eastern Time, so 15 minutes after the futures close. We'll be going over this strategy in great detail, and you can sign up here at this link. It's going to be below or above this video. I haven't decided yet, but look above or below this video when I send it out, and you can sign up here on the webinar.